How many of us are currently in a WhatsApp group, or we have received a flyer trying to raise money for someone who is not feeling so well? Someone most probably is admitted or is in a situation where they are running out of money and they still need medical treatment. I know I'm in some WhatsApp groups like that. I don't know about you, but I have seen quite a number of such similar situations. Right now, I want to talk about a very common scenario in Kenya, right? I'd like to give this character a name. John, Jane, let's just call this guy Kimani, right? So Kimani is a very hardworking 36-year-old man. He is currently in his investment journey. So he's working, he gets his income, and then in addition, all the money he's making, he's actually putting it into assets which are actually going to generate him even so much more money. So he has put money in the stock market, in the bonds, and even has bought some pieces of property. And because Kimani does not believe in insurance, right? He feels that insurance is not necessary, not even medical insurance is necessary because he rarely falls sick. So he's like, you know what? Let me save this money and put it in and buy more investments. And then life just happens. Kimani falls so sick that he has to get admitted. Let's even start from the point of, for you to get admitted in Kenya, for Kimani to get admitted, he has to raise about 150,000 just to get a bed. It's not a secret that if you do not have medical insurance, the nurses can just leave you to just suffer at the reception. So what does Kimani do? He has to raise money really quick because a lot of his money is tied to these illiquid assets. So his family, put up a WhatsApp group quickly and call the friends to be able to now contribute for him to even get access into the hospital. Now he is in hospital, and the only thing that he has is his property, his other assets, and maybe now access to someone who can give him a loan. And because the medical bills are accumulating, what does the family do? They go to a Shylock, or they use his credit card to be able to get some money to be able to take care of his illness. And then the bills go up and up and up, and he is so much debt. And the worst thing is, in this situation, we don't even know at what point Kimani has to get out of hospital. This now brings us to our second and very important conversation: medical insurance. We have spoken last week around emergency fund, and at what point is emergency fund not enough? Because right now, even if Kimani had his emergency fund, most probably to be depleted within the first few days. So what happens when you have a medical emergency and you need to make sure that you have enough liquidity and access to take care of this situation? So what exactly is this medical insurance? Medical insurance is a financial tool that offers financial protection against unforeseen injury, accident, or even illnesses. That means that it protects you against the medical costs that come because of these matters by giving you access, number one, to hospitals, to the doctors, to clinics to be able to cater for this condition. And secondly, it reduces financial loss because of these unforeseen illnesses and accidents. One of the biggest reasons for filing bankruptcy or for a family going from 100 to 0 is medical expenses, unforeseen medical expenses. It is therefore super important to make sure that we have this medical insurance so that in the case of this unforeseen and unfortunate medical emergency, you have access to the hospitals, you have funds to pay the doctors, the clinics, so that you do not have to go into your own pocket, you do not have to access your investments, you do not have to beg and borrow to be able to access these medical treatments. And your emergency fund, as I had mentioned earlier, is never enough because these is an emergency that is way beyond what an emergency fund can take care of. It is therefore important to be able to put this plan aside to make sure that you have access to good medical care when the time comes. What are the two types of medical insurance that we have here in Kenya? Number one, we have our government-sponsored medical insurance, which is called NHIF, slowly transitioning into SHIF. And secondly, we have private medical cover. And the question is, if I have a private medical cover, is it necessary to have NHIF or SHIF? The answer is yes. The NHIF actually does take care of some medical bills which are not taken care of sometimes by private cover. And also, as a place to start, it is very, very important to have this as a foundational medical insurance before now you get your private medical cover. Because something like NHIF pays for, say, hospital beds, and there's an amount of money that NHIF pays that not even the private medical cover can pay. So yes, it is important to actually have both. Start with NHIF and then slowly transition into your private medical cover. Both are very important. Have to remember now with NHIF, you only have access to government hospitals, except if maybe you are a civil servant, you can actually access private medical care using NHIF. But you as a normal civilian, you can only access government hospitals. And then if you want to access private hospital, it will also be important to have a private medical cover. So both are important in this situation. So now you have made the decision that you want to get your private medical cover, and you've come to La Risk Africa and they want to help you set one up. What are the 6 factors to consider before getting a medical cover, actually a private medical cover? Number one, we have the sublimits of cover. What exactly is a sublimit, you ask? Sublimits are the extra limitations that an insurer puts for specific medical conditions or medical expenses. In short, the insurer is not willing to go above this amount in the case you get that condition. A very good example, say one has a pre-existing condition. You might have a 3 million shilling cover, but the insurer says that I'm only willing to pay to a maximum of 400,000 shillings. And this varies with different insurers. So it's important to take note of that. What exactly are the sublimits of this cover? Another example is, say, maternity. You could want a good maternity cover, but now an insurer maybe has only put it to a maximum, say, of 100,000, 75,000. So in as much as, yes, you're getting the overall limit for your insurance policy, it's important to look into now the nitty-gritty and go down to the extra limitations that the insurer is willing to pay for a specific condition, for a specific medical expense, so that you're not caught off guard. Say you are in hospital and you know, yes, you have a 5 million limit on this coverage, but now you're told, oh, I'm sorry, madam, or I'm sorry, sir, your cover is over, only to find out the actual amount that is over is the sublimit for that condition it is that you have. Now, in this next session, we're going to look at the different sublimits so that you are able to notice what exactly to look out for. Let's look at a live example. This is a medical quote we shared with a client last month. She's 31 and she has a 2-year-old child. And the reason why she took this cover is because at work they are not given this cover because she's a consultant. So she wanted to protect her family finances against unforeseen medical expenses, literally just for her peace of mind. So she took a 1 million shilling cover. And we can see here there is the inpatient. This is what it is that we want to go through now, because as we said, there is the main limit, but within the main limit, there is sublimits within it. So the inpatient limit you can see here for both illness and accident is up to 1 million. And first of all, let's see the difference between illness and accident. Illness is internal and accident is external. What does that mean? Illness manifests within the body. That means someone has a viral infection, bacterial infection, or an issue with the organs. And accidental comes from outside, like an impact from outside, whether maybe someone got hit by a car or fell down the stairs. Accidental is something that was unforeseen. So both of them are under this one limit of 1 million. And inpatient caters for only admissions. That means you actually have to use a hospital bed, right? So inpatient is the bare minimum level of cover you can get, because you cannot even get the outpatient. We're going to get into that without having inpatient, which I also believe is the most important, because if there's something that can make someone bankrupt is admissions. So let's now go into the inpatient illness sublimit. So yes, we've seen the 1 million shillings is the main limit, but we have seen people who've gone to hospital, in as much as they have the 1 million shilling cover, within a few days they're told, oh, I'm sorry, sir, or madam, your cover is over. So what does that exactly mean? So let's look at it. Let's start here with bed allowance. This is the type of bed that you can access based on your level of cover, and this person can only get now the general ward bed. If you want a better bed and you have the 1 million shilling cover, that means you have to pay the rest of the amount of pocket, because this, based on the package, this is what the insurer can pay. Or beforehand, you can just take a much higher cover, maybe 5 million, 10 million, which will assure you of an in-suite bed, right? And then we have chronic illness. This is a condition that is going on over and over. That means this could be high blood pressure, that could be high blood sugar, and such illnesses that require long-term treatment. Then we have cancer, pretty self-explanatory. For example, a breast cancer, or, a colon cancer that manifests and now someone requires treatment also over a long period of time. Then let's look at pre-existing. Pre-existing means that you had this illness before you got the cover, right? That's why you can see that there is also a limit that the insurer is willing to pay for such an illness. Congenital is something someone was born with, for example, autism. And psychiatric illness is now a mental illness. And remember, because this is inpatient, that means someone has to be admitted for them to access this. So you can see here they've been bundled together. Whether you do have chronic, congenital, pre-existing, you can only get to a maximum of 300,000 with this insurer. And in the case of psychiatry or psychotherapy, that is to a maximum of 150,000. That means if someone had a pre-existing condition, they will not be covered to the full 1 million. They can only be covered to the level of what the insurer has given, in this case, 300,000 shillings. An organ transplant is only to 200,000. That is also self-explanatory. Someone maybe needs a kidney transplant. The insurer is not in charge of looking for the person, but say you found someone who's willing to donate. When they're doing the surgery or the whole hospital treatment, they can only cover you to 200,000. You can see again, not to the 1 million. Dental illness. In the case now you need to get admitted because you have an illness that has to do with now your dental space, you can only be covered to 50,000. Also, again, this is usually an area of confusion. This does not mean that you've gone for a dental checkup, that you go into the dentist and then get out. No, this means that you actually have to have a procedure done and you have to be admitted. And then we have ophthalmology, same thing, but now for eye illness, also not a matter of you going to the doctor, the optician, and then coming back. This means that you actually have an illness that requires you to get admitted. Whenever you see inpatient, just remember there is an admission that has to be involved. Then we have emergency evacuation and ambulance services. That means that maybe you got an emergency somewhere, maybe at home or maybe at work, then you need to be taken to hospital quickly. So this one does cater for that, and usually ambulance service and also sometimes even flight. But remember, again, up to the cover of up to the level of your limit. And then international emergency cover, this insurer does not cover that, but there's some insurers who do. In the case now you're to go outside the country, then there's an emergency. Some insurers do pay, but it only has to be an emergency. It's not you walking into a hospital, let's say in India, and then out. If you want that type, you have to get an international cover for that, right? Overseas evacuation and treatment. That means that you need to be moved, say, from a hospital here in Kenya to maybe a hospital in India to be able to seek treatment. Some insurers cover this, some can pay for it, but this one can only pay based on reimbursement, and you can see they can only pay for the country India. You cannot choose now to go to Europe for this specific cover. You can only go to India, but you have to first of all pay, then the insurer pays you back. That's why you can see here it's on reimbursement. So as I said, if you want to be able to walk into a hospital outside the country, it will be important for you to get a international medical cover. Home care services. For someone who's been in hospital for a prolonged period of time and it's getting expensive, and maybe the doctor is like, okay, this person can actually go home, and maybe nurses to come and see him. So home care services is where now a nurse can actually, or a doctor can come and check the patient and come back, right? So this one also has it's also covered up to the limit of cover. And some even say, okay, I can only cater for that for the next 90 days. So it's good to always look at your policy document to see. But this one is catered for. Rehabilitation cover. This means that you have been admitted and now you're ready to go home and you need medication. So this medication can be taken within the inpatient limit. So, and up to a specific number of days. That means that, yes, you're out of hospital, but for you to now get better, maybe you need a bit more support and you need more medication. So the doctor can say, oh, maybe you need to take some of this medication that you are taking in the hospital for maybe still another 20, 21 days or 2 weeks. So with rehabilitation cover, the money can only be paid up to 15,000, but within the 21 days of discharge. And then we have the lodger fees. Lodger fees means that in the case now your loved one is in hospital and you also want to sleep there with them, the hospital can provide maybe an extra bed and food. So the insurer is willing, but only if you have a child under the age of 8 years. Yeah, that means you can stay there with your child, they can give you a bed and they can give you food. But if your child is over the age of 8, now you'll have to pay for yourself or you have to be going and coming back, right? And again, different insurers act differently. So there's some who are a bit more flexible. They can say covered for a child up to the age of 12 years. That is now covering the inpatient sublimits. So always check the inpatient sublimits. We have shared a book in the description box. So please go check that one out, because you will be able to now fill in these gaps yourself for your own medical cover. Go get your policy document or at least a summary of your benefits, and then you'll be able to see exactly what am I covered for. And then there's the checkups. Yeah, there's usually an extra benefit. So this one covers an annual wellness checkup within outpatient up to 5,000. That means maybe going to check for cholesterol, blood sugar. It's always good to be doing maintenance also of your own body, especially after you hit, I always say after the age of 20-25, always make sure that every year you go get checked. Yeah. And you can see it's only for adults. So maternity, for this insurer, you have to buy maternity separately. But even if now you haven't bought the maternity, because here the lady said she doesn't want maternity, she's not planning to have any more kids. But in the case someone had a first ever emergency C-section, the insurer can pay up to 50,000. But remember, it has to be an emergency. It has to be a C-section. Yeah, the thing is that it has to be something that was completely unforeseen. That means the child most probably has come pretty premature. And this is not like the normal elective C-section where you know that the child is supposed to come around this time. No. Right? If you wanted now to be covered for normal and cesarean delivery, then now you might have to take it as an extra. Yeah, I will just top up what it is that you have here. Some insurers already include it, but this one does not. And you can see here neonatal and prematurity condition. So if the child comes premature and he has neonatal condition, the insurer is willing to take 300,000 out of your main limit of 1 million to be able to cater for that. So you can see the way, as I mentioned, there's the main limit of 1 million, but the insurer has put sublimit to the extent where they're willing to pay for specific conditions. Some insurers also offer additional benefits. So you can see here funeral expense, they cater for 75,000. That means if you are to die, the insurer will pay your family 75,000 to whoever it is that you've written as beneficiary when you're filling in the form. And then COVID-19 treatment, this insurer also takes care of it, but up to 300,000 only for critical illness cases and not moderate, or 300,000. That means that you are in the ICU or HDU, right? So the inpatient cost here you can see comes to 39,444 for both the mom and the child, which I believe is pretty affordable for your peace of mind, right? So now let's go to outpatient. Inpatient, remember, it requires you to get admitted. But what if you just want to go to a pediatrician or you want to go to a gynecologist? So let's go look at the outpatient limits. So you can see here the outpatient cover is 50,000 for both the mom and the child. And then you can see here, we're going to go into the waiting period shortly, so I'm not going to address it here. You can see here there's copay structure for this one. Some insurers do give copay, others and at different amounts. So it's good to always do a comparison. So for us, when you ask for a quote, we'll definitely share a comparison quote based on what is the level of cover you want or what is the budget you have. So you can see here, the consultation is covered up to 2,500 and then the balance is paid off pocket, or now so you can see that. And then we have pre-existing condition is paid in full, and that means that in the case now you, as I said, you already came in with this illness, it can be paid in full. And then we have prescribed medicine, X-ray, lab scans, MRI, antenatal, postnatal, all those are paid in full, but up to the limit of 50,000. If it goes above 50,000, obviously you have to take it off pocket. Baby friendly and KP vaccines as well, right? Again, some insurers give to a specific limit, so it's good to always check to what limit can this be paid. So you can see here the premium cost even for outpatient is much higher than the inpatient, because the chances of you now going the in and out of hospital every single time to go see, there's a bit of control also for you on your end. With an admission, you cannot really decide, I'm going to admit myself. But usually with the outpatient, the chances of you using this cover is pretty high. So that's why you can always tell that the premium cost for outpatient is high, right? Higher than even inpatient. So there's some people who, and again, it's good to know that you cannot get outpatient cover without inpatient. I had mentioned earlier, inpatient is the base, and then you can continue now topping up. So after inpatient, you can get outpatient. And if you want dental and optical, you should have both in and outpatient, at least here in Kenya, right? So let's say now you want to have also dental and optical cover. So here she took 10,000 worth of coverage. That means with dental, she can go see a dentist, she can get extraction, fillings, everything is covered, X-rays, prescription, but only to a maximum of 10,000. Optical, same thing, consultation, frames, lenses, but only to a maximum of 10,000. So you can see here the cost of dental is 7,500, cost of optical of 7,500. So cost of everything in, outpatient, and dental and optical is 97,000. But if we include taxes and stamp duty, taxes usually 0.45% of the overall premium, and now the stamp duty is usually 50 bob. So everything is coming to 98,000 for all those things. So a very good thing to note is if you do not have, say, this amount of money, I always say at least start with the basics, start with the inpatient. You can see inpatient is only 39,000, because you have to ask yourself, which thing can actually make me go bankrupt? Outpatient, asking for a friend for 5,000 here, 3,000 there to go see a doctor is not that hard compared to now you have to get admitted, and then you need this people now to help you. It's harder for them to help you raise 1 million compared to like 10,000 or 5,000 calls of outpatient, right? So always important, to put that into consideration. And then let's go to waiting periods. Very important also to put into consideration, as we had mentioned earlier. So you can see here, accident has no waiting period. Just generally, you can literally be on cover today. Tomorrow, if you're to get into an accident, the insurer has to take care of everything. Inpatient illness, there's usually a waiting period of 28 to 30 days. Again, I told you inpatient illness or just illness in general, there has to be the waiting period, because again, we don't know if you came in with this illness. Because again, if someone was to get malaria today and then they get a medical insurance today, the insurance is not going to cater for it. You have to get insurance before the unforeseen circumstance happens. So you cannot get malaria today, then go to the insurer tomorrow and say, oh, I need to buy insurance so you can take care of my situation. No, it doesn't work like that. Outpatient illness here, 30 days as well. Maternity services, you can see here, also 10 months before now you can be able to access. Yes, as I said, you cannot get pregnant and then go to the insurer to get insurance to take care of the pregnancy. Insurance takes care of unforeseen, always. Yeah, and then all these other conditions, also you can see here, pre-existing congenital conditions, even chronic condition has a 12-month waiting period. So even if you already have some of these illnesses within you, you cannot be able to be treated if it's still within the 12-month waiting period. It will only now kick in after 1 year because you already have come in with it. So usually the insurer puts a 12-month waiting period. Same thing for cancer. So it's also good, as I mentioned, to know what exactly is excluded. You can see here, professional and hazardous sports are excluded. So if you want them to be included, now take a more specialized insurance for that, right? Contraceptives are also never included in our Kenyan medical covers. STDs for this specific insurer. Alcohol or drug-related illness, as I'd mentioned, because you made the choice of taking the alcohol and then you got into an accident, the insurer will not take that because they feel like you had a part to play, right? And then also war generally is not catered for. So again, this is now what it is we wanted to cover. It's always important to remember there's the main limit and there's the sub-limit within the limit, so that, again, you come and buy medical insurance based on now a place of knowledge. Number 2, we have the exclusions of the cover. This is what the insurer is not willing to pay. And one of the biggest problems we're having in the insurance is people feel that insurance are not maybe very straightforward, or they don't give a lot of information. That's why it's also equally as much your responsibility to know what is covered and what is not covered. Very good example of an exclusion is, say, for example, you got an accident because of drinking and driving. Number 1, drinking and driving is illegal. So an insurer will never cover something that is illegal. So when someone drinks and drives and say someone got into an accident, actually the first thing that they check is the blood of the person who was driving to see if there was any alcohol content in the blood and if it exceeded a certain limit. So if they find that those extreme levels of alcohol in the blood, and that could be the reason why they got or he or she got into an accident, the insurer will just not pay, right? So it's important to note that if you are under the influence of drugs or under the influence of alcohol, the insurer will not pay. Yeah? And again, go back to a medical policy document to see this is an exclusion across. Another exclusion currently in our Kenyan medical insurance is contraception. Contraception is not covered, or even sometimes fertility treatment. So it's good to know that in this situation, you might have to self-insure, you might have to set aside an amount of money to be able to cater for this condition or for this specific situation because the insurer is not willing to pay for it. Other ones that were extremely controversial were in the case of the pandemic, the last time that there was COVID. You remember that some insurers only paid maybe out of goodwill, but it's generally an exclusion. Usually pandemics are exclusions in insurance policies, especially medical, because when the insurer was calculating the amount of premium you're meant to pay, they did not factor this in. Usually if they were to factor it in, it was going to be very expensive. So it's important to always check, what am I covered for and what am I not covered for? For this specific situation and for this specific condition, I'm going to talk more about it in a different video. Number 3, we have your waiting periods. So this is the amount of time before you can actually access some benefits from your medical cover. A very good example is before you can access, say, maternity cover, majority of the time is about 10 to 12 months waiting period, right? And different conditions have different waiting periods. And also sometimes it could be dependent on the insurer. Accidents have absolutely no waiting period. So in case you are to get medical insurance today, everything has been paid for, you are now onboarded, you are on cover, and you get an accident the next day, the insurer has to pay the full amount. But now mostly for some medical conditions, say things like the malaria, cholera, just more general illnesses, the waiting period for you to access is sometimes like around 30 days. Things now like if you have a pre-existing condition or a chronic illness, the waiting period could be 12 months. Even there's some insurers make it 24 months. So it's important for you to always check. A very good question that comes is, why do we need a waiting period for, say, for example, something like, maternity? We get a lot of prospective clients who come to us and say, oh, I'm pregnant. I've realized I'm pregnant. I need medical insurance. This is where now we tell them that we cannot give you medical insurance that will cater for your pregnancy or for your maternity needs. This is the reason why. You have to understand how insurance actually works. So you have to get insurance before this condition happens, right? So, for example, in the case of a pregnancy, we are expecting that you should have had this medical insurance prior. Let me give you an example that you can understand. Say you have your car. You cannot go and get a car accident or your car stolen, and then you go to the insurer and say, oh, by the way, I need a car insurance to be able to, replace my car. It doesn't work that way. You have to get the insurance first, and then if this situation is to happen, then the insurer can pay you out, because insurance pays for unforeseen conditions. Just the same way with pregnancy. You can't get pregnant fast. Then you're like, oh, now I've realized I'm pregnant. I need to go and get a medical insurance so that the insurer can cater for it. It does not work that way. So in the case now you are married, have a partner, it is important for you to just have this medical insurance, because you never know. You could actually fall pregnant, and because you don't have medical insurance, it has to come off pocket, and it is not cheap. Number 4, we have jurisdiction of cover. So this is more along the lines of accessibility. In different countries, if you have this cover, you have to ask yourself, with this medical cover, can I actually walk into a hospital outside of my country or into country A or B and be able to be treated? So if you're someone who travels often, it will be important to put into consideration the jurisdiction of cover, so that now you know that if you're to fall sick anywhere around the world or anywhere it is that you're going to be, you have access to a hospital. So if you're someone who travels much, it will be important for you to have an international cover, because we know that if you're to fall sick in India, if you're to fall sick in South Africa, you can still walk into a hospital and be treated. And a lot of our covers here in Kenya usually are just local, so they can take care of you, say, just in the country Kenya, and others go to the extent maybe of East Africa, but it will not go beyond those borders. So it will, as I said, it's very important to always check. So if you're someone who works locally, you barely travel, it will be good or important to consider a local cover. Number 5, we have the hospitals that are covered. Before getting any medical insurance, it's important to know the list of hospitals, clinics, and doctors beforehand that you have access to through this medical insurance, so that you do not get surprised. We get situations where someone walks into a clinic or goes to their doctor only to be told that, oh, we do not take this medical insurance. So if you already have your specific doctors that you prefer or hospitals, it's good to have medical insurance that can give you access to that doctor or access to that hospital. So do your homework. Always ask for the list of the service providers, the pharmacies that this insurance is going to give you access to, so that you can know beforehand whether to take this cover or not. Last but not least, we need to put into consideration cost. So cost is affected by many different things, from the age to the insurer to, the jurisdiction of the cover. So it's good to have something that, obviously you can easily afford, so that you don't stretch yourself that much. But at the same time, it's also equally as important to start with the end in mind. You need good coverage. So if you have a very good agent, they can help you to strike that balance somewhere in the middle, where you get something that gives you a good coverage for a good cost. This is where actually our area of specialty comes in, because when someone actually asks for a medical cover, we give them different types and different insurers so that they can be able to see the difference and to compare before they make a decision. And again, you can start also with a cover which is cheaper. Say, for example, you are a student or you're just starting out at a workplace and you are tight on budget. You could start easily. First of all, yes, NHIF is important. Then you can start with a budget cover. It may not give you access to maybe the top tier hospitals, but it can still give you access to good hospitals. And then eventually you can go to the next level and get a very good private medical cover, which you have access to the tier 1 hospitals, the bigger hospitals, the other tier of hospitals. So again, as I've mentioned, there's the different tiers of the hospital. The tier 1 is like the Nairobi hospitals, the Aga Khans. Tier 2 is like the Coptic and the Nairobi West Hospital. Still good, but if you want something that is more affordable, it will give you access to now, say, these tier 2 hospitals. Also remember, if you add your family members, obviously the premium is going to go a bit higher. But if you want, say, even insure your child just by themselves personally, you can also take out now, say, junior covers. And if you want to help maybe insure your parents, you can get them as senior covers. Yes, it will be a bit more expensive because of their age, but it's still more expensive not having this cover. So yes, cost is a very important factor that plays when it comes to picking out medical insurance. What exactly is the process of getting this medical cover? Number one, you can do your own research and go ask for different quotations from different medical insurers, and then you do the comparison yourself. But what is easier and will not even cost you any more is to use an insurance agent. You can ask them for a comparison of different medical insurers, and then you can pick something that is within your range. So what you could do, you can tell the insurance agent that, okay, I'm looking for a 5 million shilling cover or 10 million shilling cover, inpatient, outpatient, and then they are going to give you the premiums that you need to pay. Or you can tell them, this is my budget, and find me a cover that is within my budget. So number one, you choose the type of cover you want based on what has been presented to you. Number two is now filling in the proposal form. Based on which insurer it is that you have picked, you will be given a proposal form or an application form where you're going to put in all the necessary details to be able to get access to this cover. Then you will have to put in or share the documents which are necessary, which include your ID. And if you have any children and you want to add them in your cover, you'll need their birth certificates. You'll also need your KRA PIN, very, very necessary. And also it will be important now, sometimes they ask for your photo, your passport photo, and obviously the proof of pay. Then after this, all this information is going to be sent to the insurance company, who are then going to give you a medical card and your medical policy. And nowadays, not all insurers give medical card. There's what we call smart access. All you need to do is just go put your fingerprint and you're going to get access to whichever medical insurer based on your fingerprint. So the application process is actually pretty easy. It will not take you more than 3 to 5 working days to get you onboarded and to get your medical insurance. And if you want your medical insurance, please go to the medical link here at the box and you're going to get you started. Sometimes the cost of medical insurance might feel overwhelming. So how exactly can you plan around it? How can you plan around the payment of these premiums every single year? Number one, you could have a sinking fund. You could actually have a specific money market fund account where you put in an amount of money monthly so that when the time has come for you to pay for your medical insurance premiums, you can pay it with ease. A very good example is if, say, your medical insurance premiums come to 120,000 every single year for you and your family, you could have a money market fund account where you're going to be putting aside 10,000 shillings every month. And at the end of that year, you can use that lump sum to pay for your medical insurance. Number two, we have what we call insurance premium financing. If you want your medical insurance right now and you do not have the money, you could get a loan, and this loan can be now from the bank, which will be used to pay the insurance company, and you will pay your bank in maybe 3 to 4 installments. So you don't have to pay the whole lump sum at a go. In the case you need any guidance in that, please reach out to us. We can be able to help you set up the IPF, because we have some of our clients, because they cannot pay the whole lump sum, they choose to pay in maybe 4 installments or 2 installments. What can happen is we can help you with the application process, also for the insurance premium financing, and then get you started in your medical cover. Because as we have mentioned, it is more expensive not having a medical insurance cover than actually putting aside this amount of money. I don't know about you, but I rather have a predictable 100,000 that I have to put aside every year compared to an unforeseen 2 million shilling bill. Number 3, you could start small. You could start first of all with your NHIF, which is 500 shillings a month. And then you could slowly go to a budget cover. Budget covers, even in this country, can go as low as 6,200 per year. Remember, it's also dependent on your age. And we have budget covers even for up to 20,000, 25,000. but at the bare minimum, at least have a cover that you call your own. So yes, you can start with your NHIF, go to a budget cover, and when your income situation improves, you can go and get a premium cover. And last but not least, you can start with only an inpatient cover. You have to ask yourself this question: what medical bill can actually break my bank? You see, going to a gyna or having to go to a doctor because you have the flu, yes, will set you back a bit, but it's not going to be as bad as if you have to get admitted due to an illness you know nothing about, or it was extremely unforeseen. So I would urge you to at least start with an inpatient cover. The chances are high that you might not use it as often because getting admitted, unless you are at an extreme condition, but if an admission has to happen, you have access to the hospital and you will not have to go into your pockets to take care of this medical bill. It's very painful to see how many families are set years and years back because they did not have a plan for an unforeseen illness. Only one person could fall ill, yes, but then it will affect the rest of the family because, we love our person, we have to contribute, we have to make sure that they are good. It could be them, it could even be us. So how can we make sure that no matter what, everything it is that you are trying to build, everything it is that you are working so hard for is shielded, is protected against medical emergencies? Because again, as we have said earlier, one medical emergency can wipe all the years of your hard work just because of lack of a plan. So it is important to just have a pre-planned amount that you set aside every year to take care for an unforeseen medical bills compared to an unforeseen, as I said, 2 million, 3 million. You do not have this money just hanging around somewhere that is going to take care of these medical bills. So in conclusion, it is important to set aside a medical insurance to protect, to act as a hedge around all your finances.